Today, we are with Álvaro González Ruiz Jarauco. He's head of private equity at Andbank, right, Álvaro? We will be talking about co-investments. So, Álvaro, in a market where the co-investment opportunities are tightly allocated, and how do you practically secure access to top-tier GPs from being part of at a bank like Andbank that's very important in Spain, but is not a global entity, right? So how do you make sure you can access these top-tier GPs, and also what differentiates Andbank as a partner when this capacity can be limited?
Glad to be here with you, Laura, at this wonderful conference of 0100 in Amsterdam. Andbank is the fourth largest private bank in Spain with 60 billion AUM. We are present in 11 countries. And within Andbank, we have Actius, that is the alternative asset manager, where we have several strategies, one of them being co-investments and GP-leds, right? Why have we developed this strategy? Because right now we believe there is a great market momentum to invest in these types of deals directly, no? Prior to this fund, we were doing fund of funds on a 70% basis and 30% co-investments. And now, for the time being, we are deploying 100% directly through co-investments and GP-leds. We are leaving LP-leds aside. We are investing mainly in the US, Canada, and Europe. And access, I think, is one of the main questions regarding co-investment. And I would say there's basically three main characteristics or three main instruments where we get this access, right? And first of all, we've been in the market deploying on primary funds since 2017. So we have a lot of connections with GPs around the world, especially in those two geographies, Europe and the US, where right now, and the second topic would be that right now, with the market momentum, GPs are more open to give you co-investments, either if you are an LP on the primary fund, but if not, they are willing to give you access through a paying fees scheme on management fee and carry. And basically right now GPs are establishing SPVs where co-investors from outside the LP pack can invest directly, no? Of course, this raises the question, are we getting the best co-investments, no? And I would say that right now, given the market momentum is so huge, the capacity to choose co-investments in both geographies, that at the end of the day, there's no question about the quality, because there's so much in the market that you can pick not only the co-investment itself, but also the team in which you are partnering with, no? That in a primary fund of funds, you don't have that option, no? You have the blind pool, that there's always these disadvantages of, first of all, you don't know what the portfolio is going to look like. Sometimes it's difficult, you like 100% of the portfolio of the GP you are partnering with, no? In this case, without the blind pool in the co-investments is something you have the security, no? So I would say, coming back to the original question, access is mainly because of the market trends right now, that is difficult to raise money for primaries. Second, we have these connections with the primary GPs that we have invested the last three funds. And I would say those are the main sources of capacity to co-invest. And third of all, we are also doing GP-leds, continuation vehicles. And those, I would say, are hybrid between a fund and a co-investment, because it's basically a fund with no blind pool. There's fees and underlying fees. And all mainly the new LPs of the continuation vehicle are LPs outside from the LP pack. So that's another way to get a co-investment, because at the end of the day, a continuation vehicle is exactly the same as a co-investment. You're getting direct access into a specific asset. The only difference is that the prior LP is a new one or is a previous one that has been in an investor for 5 years. So I would say those are the three main sources of new co-investment and GP-leds right now in the market for us, for Andbank.
And how do you evaluate these co-investment opportunities? Because you were saying, not like you invest in the US, you invest in Europe, you have access to the best deals. How do you do this?
Well, I have access to the best deals and not so good deals. We have access to, we try to have access to everything, no? To have a global view, no? First of all, of course, is having common sense, no? At the end of the day, we are deploying like 1 or 2 deals per month. So we are having a very good rhythm. And it's very hard for us as a co-investor to spend the same time as the GP, as the anchor GP, that has spent 6 months, 8 months with a deal. We only have a few weeks. So first of all, I would say common sense. And sometimes it's very difficult sitting in Madrid to know the full characteristics of a company sitting on the other side of the ocean. So first of all, common sense. Second, you need to trust the GP, because all the information you get, all the VDR, all the due diligence is coming from an established GP. So you need to trust that GP, and you need to do due diligence on the GP or the sponsor who is presenting you the opportunity. And third of all, we have an algorithm based on 90 parameters that we basically is cross-check of every single line item we need to see on a company. Good EBITDA margin, good EBITDA and revenue growth. Valuation, of course, is something that we measure, and we have our own valuation metrics in terms of precedent transactions and comparable multiples. The team that is leading that company. So it's basically 90 parameters that covers 100% holistically the full scheme of the company. And at the end of the day, also is something about sectors. Is the company operating in a sector that has a tendency to growth in the following years? So I would say all of those three characteristics key in deciding which co-investments we go ahead or not.
Wonderful. You're saying, no, that you have to have really good relationship. You have to trust GP. Do you tend to work with same GPs? Do you have like a list of trusted GPs that you work with? You try new GPs all the time. Like, how do you choose these GPs?
So here, Laura, our main, I would say, focus is quality. We don't focus anymore on the low mid market, so we can do high market, mid market, or low mid market. So we can do companies starting from 5 million EBITDA with no limit above. No, the thing is that there is many GPs. I believe there's more than 1,000 GPs in the US and more than 800 GPs in Europe. And at the end of the day, the list is quite long. Of course, we have established a relationship with many GPs in both sides of the ocean. But I would say that, of course, we have a list of trusted GPs. But also there are other GPs that are new for us, but that they have developed an excellent track record. And at the end of the day, we have a big network, and sometimes we can cross-reference some of the GPs with other colleagues from the industry. No? And at the end of the day, we use Preqin and PitchBook, and we try to due diligence the GP as much as possible. And I would say that having this cross-reference of a GP that has a good track record is more or less somehow easy to get. I would say the key question is on sponsorless. Sponsorless is another type of investments, and in they we must be more careful, and we must invest more time in analyzing the sponsorless structure, because at the end of the day, there's a higher risk for the being that the sponsorless has not the same structure or the same partner scheme as a established GP. No, but on the other hand, I would say that if you look to the latest track record of sponsorless in Preqin and PitchBook, I would say is higher than established GPs. But the risk is, of course, somehow higher, because you need to due diligence is harder on the sponsorless than on established GPs.
How do you approach the structuring of co-investments to optimize returns while also managing the downside risk? What levers do you realistically can happen in LP? And also another question, because you're saying you can do with these co-investments either as an LP as well, or by paying the fees. How do you decide how to do? Yeah. Do you go as an LP as well, or would you just rather pay the fee and have access to that deal?
Right now, we are trying to diversify and have a broad scheme of co-investments in the fund. No, we are launching a fund every 2 years. We are trying to have a diversification of 40, 50 companies, underlying companies. No, we usually sometimes we do staples, but right now we are only committing on paying fees on the specific co-investment. Of course, we have the primary strategy that is going to start in some time when the market has the correct momentum for it. And I would say that are completely different decisions, because every single co-investments we do, we need to due diligence the GP, and we need to like the GP itself. And of course, if we do it that way, the GP will be capable of being part of our primary strategy. So in terms of structure, Laura, we usually set up an SPV with other LPs. Or sometimes in the US, for example, we are establishing our own SPV, having only one single target in that specific SPV. We always try to structure the deals onshore. We don't use offshore structures, such as Jersey, Guernsey, Cayman Island. Usually on the US, we go through Delaware, or in Europe, in mainland Europe. And in terms of doing staples, right now we are only focusing on co-investments. Some of the co-investment, they come from funds where we are invested as a primary investors, but others they are not. But I always, in discussions with the GP, I always tell them that having a co-investment on a fee-paying basis for us is a priority for right now, and it will position the GP on a very good spot in the next 12, 24 months when we reopen our primary program in order to maybe make a commitment on the primary fund, given we already have a relationship on the co-investment side.
So it's like a good way to actually start a relationship, and then in the future, and I think it's a good approach, right? Because in the end, like you meet the GP, you have access to the assets they invest, like you know what the quality is, how they work, and then you can like go for larger commitment, which is entering as an LP.
I would say so, yeah.
Yeah, makes a lot of sense. And what specific sectors or markets have you or has Andbank developed a stronger network of sponsors or differentiated expertise? You know, is there any specific sector where you would say yes, we are like, or maybe vertical?
The short answer is no. Why? Because again, our main focus is quality, and quality can come from everywhere. I think you need to differentiate the strategy when you're doing primaries and when you're doing co-investments. When you're doing primaries, I think you need a focus. I'm going for the low mid market, for the high market, I'm going for healthcare, I'm going for X sector, whatever. But in terms of co-investments, it's a very different game. And I would say you need to go for that quality. And quality can come from the sectors that are not on the hotspot right now, like retail, for example. No? At the end of the day, right now we have 22 deals. In 1 year and a half, we have done 22 co-investments. And if I look at the sectors, I can say that the vast majority of them come from the hot sectors right now. Healthcare, technology, software SaaS, education. But that's something that has been done involuntarily. So the quality has led me to those sectors. But if tomorrow, Laura, I have a GP on a retail sector that for me is not my priority right now, with a high quality characteristics and good valuation, I will do it. No? So I don't want to focus myself, and I don't want to leave out quality opportunities just because they come from a sector that doesn't have tailwinds right now. Because I believe that the quality can come from everywhere. Sponsorless, established GPs, less established GPs, sectors that don't have good tailwinds right now. So I don't want to have any restriction in order to choose the best co-investment wherever they come from.
And for example, coming to events like this one, for you, it is important to meet the best like GPs. I mean, what would be like your main goal when you network with other?
I think being 0100 in Amsterdam is something really important for us LPs, because at the end of the day, Laura, this is a people business. You need to meet people face to face. We don't have a Bloomberg where we can pick co-investments. We need to meet the GPs through calls or personally here in Amsterdam or the other locations of 0100. So for us, being in 0100 with one single plane, you can make a good use of your time, because you can meet 10, 20 GPs in one single trip. And I would say, let me tell you, Laura, that I've done a couple of deals that were sourced here in the 0100 conference, no, as the result of a couple of meetings with GPs. So the short answer to your question is fundamental for us. I usually attend nearly all the private equity first, being 0100 one of the main ones for us in terms of deal flow.
Wonderful. And finally, from your perspective, what are the most underestimated risks and the most compelling benefits for LPs seeking direct exposure through co-investments?
I think there are many of them, Laura, and I think the market is shifting, and the primaries are no longer going to be with the same scheme, I believe. And that's my thought on the future of private equity. And I think that there's a very immediate benefit for LPs. First of all, you can deploy immediately 100% day one. Second of all, there's less fees, not only on a total amount of usually the 220 scheme of the primaries on the co-investments are usually lower in terms of management fee and carry. But also in terms of timing, you don't pay fees for a blind pool, for a team to look for companies, because you already start paying fees on a specific asset day one. So the searching period is no longer something you need to pay for. No? And last of all, you decide the assets, not only the team, but also the assets. So the capacity, the election of the LP is much higher. So I think the private equity market segment is going to switch to another scheme, and the usual primary 220 is going to represent a much lower proportion of LP commitments in the future. And I would say it's going to divide, I would say, by 4 or even more. And it's going to shift to this type of investments where the LP, specifically the sophisticated LP, has more decision power in terms of the election of the asset.
Well, thank you very much.
Thank you, Laura.